Now, just like a lot of you guys probably, I'm not the biggest fan necessarily of some of the yield max option income strategy ETFs, and even though I do own some of them throughout my portfolio, they definitely don't make up a majority of my holdings. But just after some recent back testing and looking a little bit deeper into ticker symbol YMAG or YMAG, the Yield Max Magnificent 7 Fund of Option Income ETFs. It came to my attention that not only has this ETF offered a massive amount of income on a weekly basis, yes, weekly, but it's also outperformed the SPY over the time frame it's been trading. So I figured it's only fair to make a video about YMAG, share what this ETF is, how it works, how much income this ETF has generated since inception, but then later on in the video, I'm going to share with you guys how simple it would be to potentially at least earn $1,000 or even earn $10,000 per month in income from an ETF that has a distribution rate of over 40%. So if you're a higher yield, income focused investor, or even if you're not, I promise you're going to want to stick around. So drop a like down below, subscribe, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, going over what YMAG is, because I'm sure you guys are familiar with yield max, maybe not this one specifically. Now, it says right here the Magnificent 7, so you probably have an idea, but it says YMAG is the fund of funds, meaning that it primarily invests in assets of 7 yield max ETFs. The fund's name refers to the strategy of gaining exposure to the common stocks of 7 companies, which together are commonly referred to as the Magnificent 7. Now, these 7 companies are, of course, Apple stock, we have Amazon, we have Alphabet, we have Meta, we have Microsoft, Nvidia, and Tesla. Now, it then says the portfolio will be reallocated on a monthly basis so that each of the 7 yield max ETFs held in the fund's portfolio is equally weighted. Now, just right away before we go any further, this ETF is going to give you exposure, even indirect exposure, to the 7 names we listed. So if you're bullish on the underline, if you're bullish on the Magnificent 7, this ETF might be a decent way to gain income exposure, but let's read on. Looking into the distribution history, this ETF, as I said, does pay on a weekly basis. There's only a certain few ETFs so far in the market that are now offering weekly distributions, which is pretty cool. And I say this as a dividend investor that at some time in the future, I'm looking to build a portfolio to pay for things like my bills and expenses. So why not get paid a little bit earlier? It's only going to help. So the weekly distributions as of recent, 15, 16 cents, just over 31 cents, 17 cents, and 5, almost 6 cents. So just if we were to tally up the last 4 payouts, let's say over the last month or so, it's around 60 plus cents. And that's for just one single share. Now, one thing I noticed is that this ETF does not pay the same amount on a weekly basis, and it's sort of all over the place. Now, this is just one of the main reasons I personally never use an ETF like this one as a larger position in my portfolio, just because for me personally, I like to sort of have an idea of what I'm going to earn, especially later on because I'm going to use my portfolio for expenses. But either way, even on the lower side of things, this ETF has paid out a massive amount of distribution if we're comparing it to the general market. Now, another important fact about YMAG, the expense ratio, the gross expense ratio is 1.28%. Very expensive to get exposure to a lot of these yield max names, but I think a lot of us are sort of used to it by now. The net assets are $355 million, which is pretty large, and this is considering this ETF has only been trading since early last year. Now, one of the main other reasons I don't really invest in many yield max products is because a lot of times their charts look like this. They trend down and to the right. Not every single one of the yield max ETFs, but I'm talking just a few of the ones that I purchased in the past. Now, in a second, I'm going to share with you the total return, and I promise you this 7.83% loss as far as price goes is definitely going to be made up for because of the massive income potential with YMAG. Now, I'll also say for an ultra high yielding ETF that offers, say, 30, 40, 50%, being down only 7 or 8% on the last year is honestly still kind of impressive. Now, the main problem with a lot of these ETFs, especially that buy into super volatile names like the Magnificent 7, is that when the market drops, there is going to be somewhat of downside protection because of the cover call overlay. But keep in mind on the way back up, it's going to be very hard for this ETF to recover because, of course, it sells well cover calls. But what's maybe craziest, and one of the main reasons I even made this video in the first place, is that over the last year, you have to give respect where it's due, and YMAG deserves a little bit of respect. Now, first off, just over the last year or so, what's crazy is that YMAG has offered almost $7 in income per share. And this is for an ETF that as of right now costs around 18, 19 bucks. Now, also keep in mind that YMAG over the last 0.94 years has a total return of around 34, 35%. This is with dividends being reinvested, where SPY also has had a really good year, but we're only talking around 21% or 23% annualized. Now, I know we're comparing apples to oranges here. It's very hard to compare YMAG to the SPY, so don't take it too serious. But still, on this specific time frame, YMAG has absolutely destroyed the SPY. Now, before I go through and share with you guys how easy it would potentially be to earn, let's say, $100 per month with an ultra high yielding ETF like this one, as well as $1,000 or $10,000, I want to give you guys my thoughts personally on YMAG for my portfolio. Now, as a lot of you guys know, I spend the majority of my cash balance these days buying things like Divo ETF, buying some shares of JEPQ here and there, then of course buying a ton of SHD. Now, along with that, you guys will also see me buying some higher yielding options like SFOL, like ZVOL, or even things like FEPI or AIPI. And this is simply because although I do want my long-term portfolio right here to grow over time, I also want to get to a point to where my dividend income by the end of this year in 2025 reaches over $8,500 per month. So even though Divo, JEPQ, and SHD do offer dividends, it would take so many thousands and thousands of dollars if I were to just buy those if I want to reach my goal. So just throughout the last year or so, I have been sort of dabbling with some of these ultra high yielders, buying a few shares here and there when I see fit, but again, they're never going to make up a majority of my portfolio. So would I personally ever add some YMAG to my portfolio? I definitely would do so, but only in a very small fashion. I mean, heck, you can see my first few shares of QDTE actually made it in the portfolio. This is just as of recent. Now, the reason I personally wouldn't mind adding some shares of YMAG to my portfolio is because this ETF, at least historically, has offered massive distributions, now paid out on a weekly basis, and for the most part has barely nabbed decayed, which is honestly pretty impressive. Now, to go through some of the crazy dividend math on how easy it'd potentially be to earn, let's say, $100 per month in income from YMAG. YMAG in the last month or so has paid around 70 cents per share per month. I know it pays out weekly, but just multiplying it by 4. Now, this means you would have to have around 142 shares more or less in order to earn $100 more or less per month. Now, this means that you would only have to invest around $2,700 into YMAG in order to reach that $100 milestone, which takes some dividend investors, including myself, a very long time back in the day to reach. Now, if you wanted to reach $1,000 per month just based off of the previous few payouts, we're talking $27,000 invested to reach $1,000 per month in income. Or of course, if you wanted to spend $271,000, you could buy yourself around 14,285 shares of YMAG, and that would pay you around $10,000 per month in income just based off the last few payouts. So now that we talked about YMAG, I showed you guys the historical performance since this ETF has been trading. We went over the distributions and even my input on whether or not I personally would buy it. I lastly, most importantly, want to hear from you guys down below. Are you personally holding YMAG or any other ultra high yielders in your portfolio? And if so, let me know which ones down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.